Hey everyone, hope everyone's doing well and had a good expiry today. This video is a quick recap of how Nifty behaved today. We'll discuss the price action one bar at a time and we will later discuss what we expect tomorrow. Another sideways day today. Yes, it does look like a bear trend day, but if you see, the market was mostly in this limit order trading range of about 90 points. That is what has been going on this entire week. On Monday, Tuesday, Wednesday, and here's the Thursday. The market has been stuck in a very small range of about 200 points. We had a trading range here, then we broke out above another trading range here, we broke out below another trading range here. Most of the uh, trades entire week has mostly been scalping. Very difficult to uh, just hold on to your trades and sit in one direction because the market has constantly been reversing. Uh, if you lose focus, you will easily lose money on in markets like this because you quickly need to buy low, sell high, quickly scalp out your positions, and that is how the market has been. So, what was I expecting going into the day? Let us begin from the higher time frame charts. Here's a weekly chart. Uh, it's a very obvious parabolic wedge here. You can say the parabolic wedge started here with the first push. You can also say the parabolic wedge started here with the first push. Doesn't make much of a difference. The understanding is the same that after the parabolic wedge, the market usually corrects for about 10 bars and two legs. Also, if you see in this entire rally here, this is the biggest bar, and this is coming after almost 10 bars into the rally, which is usually an exhaustion gap. And also, after an exhaustion gap, the market usually the first target for the market is the high of this previous breakout point, which is 25,222. The market will first close this gap, and the second target for the market will be the low of this buy climax, which is 25,824. So what usually happens after a parabolic wedge or a climax is uh, that the bulls, the buyers, after getting this gift, they step aside and they let the bears take control over the market over the next 10 bars. For the next 10 bars, the bears have an opportunity to reverse the market strongly. And if they fail, the bulls will wait for 10 bars, and if the bears fail to reverse the market for 10 bars, they will take their longs again and drive the market up again. So, yes, it's a parabolic wedge, and you are expecting 10 bars sideways to down, but here, in this case, sideways is more likely rather than down. We might close this gap, we might come all the way to the bottom of this buy climax, but I'm not expecting a sharp reversal down. After such a tight bull channel up, the bears will have to make some kind of a top here before they have a strong reversal down. So on the weekly chart, the market, yes, is bullish, but at present, it is likely to go sideways for a few bars, close this gap, maybe fall all the way to the bottom of this buy climax or all the way to the bottom of this previous high low. Also, we are far away from the moving average, and the price action is not as good as average. So the buyers will wait for a few bars before looking to buy again on the weekly chart. The same is the case on the daily chart. We have had a couple of pushes up here. If you see after breakout above every breakout point, if you see this was the previous breakout point, we broke out above, we had a deep pullback here. If you see once we broke out above this breakout point here, we had a deep pullback, and now we broke out above this breakout point here. This is the breakout above this 11th June breakout point. After every breakout, the market has been pulling back. So what do you think is more likely going to happen? We are going to pull back below this breakout point. That is a that is what is more likely going to happen. Also, if you see on the daily chart, you can see a parabolic wedge like that. You can see a parabolic wedge like this. Different ways to draw it. And we have remained sideways for about 8 to 9 days. The bulls have stepped aside, but the bears have not been able to generate big bars closing on the lows. After every bear bar, if you see, there has been bad follow-throughs, big bear bar, bad follow-through, big bear bar. A lot of overlap has been happening here, which is an indication that the bears are not strong enough. And after a correction, after maybe close of this gap or maybe test of the daily EMA, the bulls might step again. Once we have a good buy signal bar anywhere around this area, the bulls will enter above its high. We have been moving in this channel since April now, and the bears have not been able to reverse the market strongly down. Even though today has been a bear trend day with a close near its low, if you see the bars to the left, we have not been able to close below this prior swing low. So bears are not as strong as they look. Yes, I am slightly bearish for until we close this gap here of 25,222. I am slightly bearish, but once we close this gap and we if we do have a sharp reversal up, I will get back to taking my longs again. So before going into the day, if you see, this was a bar in front of me on my chart right now, and we were in a limit order market. We had a doji yo. We were finding buyers below the prior lows, and we were finding sellers above the prior highs. Even on 8th of July, we had a big bull bar, but as soon as we went above the high of this was 25,548. As soon as we went above the high of that, we found sellers. So I was expecting buyers below the prior low, below the previous day low, which is 25,424, and sellers somewhere above the high. The market was stuck in this range for 3 days, and on Wednesday we broke out above, but then again entered another trading range here. This is a case of trending trading range day, trading range week actually. So, and if you see, it was a big trading range. We did on Wednesday get back into this range. So today, if we did open anywhere within this range, I was expecting another trading range day, at least a trading range open for the couple of hours, and I would have been looking to buy low and would have been looking to sell high. If the market wanted to have a big trend up or big trend down, it could have easily opened a gap up or a gap down. The range is not that big. It is just 140 points. So it was very easy for the market to open a big gap up and continue go up, continue to keep going up if it wanted to get out of this range and give a big bull trend or a bear trend day. However, it did not. So let's understand the price action one bar at a time now. Okay. So first bar of the day, if you see yesterday, we closed as a sell climax. You can draw it like this, or you can draw it like this. And we had a sharp reversal up. And after a sell climax, after a three push sell climax, you expect two legs up. This was a we closed always in long yesterday. We had a reversal up, we had a pullback, and today with the open being this up, this was a second leg up, and now we had a sharp reversal down. Big bear bar closing on its low. We are in this trading range. We approached the trading range high, and as soon as we opened there, we found sellers, and now we have a big bear bar closing on its low. Two legs up in a trading range, and now big bear bar closing on its low. Big risk, but an easy scalp here, high probability scalp here. You can sell here, but only for a scalp. High probability to wait for a few more bars, wait to see how the market, if the bears get good follow throughs, and then look to sell later. But looks like we are going to go lower for at least a couple of legs before we reverse back up. Also, how I discussed on the daily chart, I'm I was expecting buyers below the prior low because of all this limit order market. there are more likely buyers below the prior low and more likely sellers above the prior high. So I was looking to buy somewhere near the prior low, the previous day low here. So big wave are closing on its low. Looks like we might go for a second leg down. Bar two, another bar closing on its low. Two bar bear spike here. It is possible we might fall for a measure move down here based on the height of this bear spike from the open to the close of the bar. Two big bear bars. Even if we do pull back here, we might fall for a second leg down. And I'm expecting buyers somewhere here. Until then, I'm only looking to sell here. Bar three, low and short here. More likely sellers below the low of this bar for at least a scalp. Bar four. Now this is disappointing for me. Yes, we did get four bear bars here, but why are we not getting strong bear bars closing on the low? Except bar one. This bar did not has a big tail on the bottom of its bar. Bar three had a reversal up. Bar four has a big tail on the bottom. Why are we finding buyers below the low of the bar? Why are bears hesitating to sell here? Bears are hesitating because we are right near the bottom of this range here. We are right near the bottom. We're right near the previous low, and I think we might find buyers somewhere around this zone. So yes, we did have a two-bar bear spike here, but the bars are overlapping here. Bar two, bar three, bar four, all of these bars are overlapping, which makes me think that we are entering the channel phase of the market after the bear spike. And when the market is in a channel phase, I'm looking to sell a pullback rather than sell below bars. So I'm looking to sell above bars, and I'm expecting buyers below the bars and more likely buyers below the low of previous day. Another bear bar closing on its low, but why are we getting this sharp reverses up? As soon as we went above bar 4, yes, we found sellers, but I'm expecting buyers below the low of bar 4, more likely buyers below the low of previous day. Bar 6, first bull bar in first 5 bars, more likely sellers above, looking to sell on a pullback for a scalp all the way below the previous day low. Another bar closing on its high, but this is more likely going to be a bull trap. What is the probability of market going straight up after first 5 bars on open being a bear bar? Very low. The bulls will have to make some kind of a base here before they attempt a sharp reversal up. Yes, it's a strong bull bar, a bar closing on its high, but the buy signal bar is weak. You can say it's a minor wedge here with bar 2 and bar 4, but the buy signal bar is weak and it is coming after 5 bear bars. More likely sellers above the high of this bar. This is more likely going to be a bull trap rather than a reversal up after sell collapse on open. I was looking to sell, but this this bar did not give. I was looking to sell on a good sell signal bar somewhere around this area with a double top with bar 5. But look at the size of this. The market did not give a chance for me to sell somewhere high and it sharply reversed down. You could sell if you while the bar was forming below the low of bar 6 or below the low of bar 7, but it's a difficult thing to do. Big bear bar closing on its low. Bar 8, double top with bar 5. It is possible we might fall for a measure move down based on the height of this double top here, all the way till 405. But can you sell below the low of bar 8? As I told you before, I was expecting buyers below the previous day low. Because of all this trading range behavior, I'm expecting breakouts to fail or at least the gaps to close. Also, you can say we had a bear spike here. We have a pullback, another bear spike pullback, and now another bear spike. It is possible this is a third push in a parabolic in a wedge bottom here. So bar 8, if Bar 9 is another strong bear follow through, another big bear bar closing on its low. That would mean that that the character of the market is changing, and I will prefer to sell lower. But right now, I'm only looking to buy somewhere in this area if there is a reversal up. Look what happened on bar 9. As soon as we fell below bar 8, we found buyers and a bull bar, and this is a bull reversal bar. But can you buy above this bar? Yes, it's a wedge bottom, but look at the size of bar 8 and look at the size of bar 9. Whenever you are buying in a tight bear channel or in a strong bear trend, you can do it for three reasons. Only if the buy signal bar, if the signal bar is very strong, or if we have a strong reversal up, or you could buy below the low of prior bars. So whenever there is a tight bear channel down, bulls prefer to buy below bars rather than take stop order trades above bars. They will do so only if it's a very strong buy signal bar or if the market strongly reverses up. Right now, the buy signal bar is not as strong, and it is not as strong to negate the effect of bar 8. So I am looking to buy, but I will prefer some kind of a micro double bottom here before looking to buy here. More likely sellers above, somewhere near EMA, somewhere near this prior high, somewhere near the 50% pullback of this entire bear leg. I am looking to buy, but only on a micro double bottom here. Look at the follow through. The bulls who bought on bar 9 will be disappointed by how bar 10 looks like. Bar 10 is another low one shot. But can you sell below bar 10? This is a low one shot, which is coming after a sell climax around the support, which is the previous low. Whenever there is a sell climax and then a low one shot at support, that is a bad combination. There are more likely buyers below bar 10 rather than sellers. Look what happened on bar 11. The bulls who bought on bar 9 were disappointed by the entry bar 10, and they preferred to exit their longs on break even. So as soon as this bar 11 went above their price, their entry price, they preferred to exit, and that is the reason we have a big tail here. Now, this is a micro double top. Bar 11 is a micro double top with bar 10. Also, if you see on a lower time frame, it is a low to short here. We went up, we went down, we went up, we went down. Low to short. So whenever there is a low to short, it is a reasonable place to sell. Yes, I was expecting a micro double bottom here, but why did the bulls allow a low to short here? Why did the bulls allow a micro double top here? Makes me think we might go lower, at least below bar 9, before we find buyers here. It is able to sell here for a scalp, but not high probability for a big move down, not high probability for a big swing down. We are somewhere near this trading range low of this entire week. So you might find buyers somewhere around this area. Wait to buy. This is a buy zone. So I'm only looking to buy, but the bear scalpers might sell here for a short scalp, which they did. Look at bar 12. Look at all the sell off here. Why are we not getting good follow throughs? Except bar 1 and bar 2. Look at the follow throughs here. Look at how the bars are overlapping. Look at all the tails here. This makes me think this is a weak bear channel. Every gap is closing. We fell below the low of bar 6 and we closed the gap here. We fell below the low of bar 9. It is more likely going to close the gap here. Can you buy above bar 12? It's a tight bear channel and it's a bear body. I will buy only if there is some kind of a double bottom here. It is always low probability to buy above a bear body, a buy signal bar with a bear body. So more likely Sellers above, I will buy only if there is some kind of a double bottom here, which we did get on a bar 11. This is reasonable to buy. You can say it's a low low bar 12, bar 13 is a low low double bottom with bar 9. You can also say it's a wedge bottom here. You can also say this is some kind of a nested wedge bottom with bar 6 and bar 9. Micro double bottom with bar 12. Reasonable to buy here. Possible low of the day. Also, we broke below the trading range of this of past 3 days, and we are finding buyers here. Reasonable to buy here. Okay follow through for the bulls. Not a strong entry bar. The bulls, if they want to reverse up from here, if they want bar 13 to be the low of the day, they need strong reversals, strong bull bars closing on the highs. This follow through is not enough. Another bad follow through for the bulls and another bad follow through. This is disappointing for the bulls. The bulls who bought above bar 13, expecting bar 13 to be the low of the day, will be disappointed with all these follow throughs here. We have been getting dojis here. Why are bulls not showing the urgency to buy above this buy signal bar? This makes me think that the bulls are preferring to buy below the swing lows rather than buy above highs. The bulls are still scalping their longs. The bulls who bought above the high of this 419 are taking scalps for 10 points. We just went 8 points here. We didn't even give a scalp profit to the bulls. And this is just disappointing. If you did buy above par 13, you should exit looking at all this follow through. Wait for a better buy setup or buy after there is a strong reversal up. Bar 18, big bear closing on its low. Can you sell below the low of this bar? I would not. Usually, after a wedge bottom, I expect two legs up. We have gotten the first leg up here. This might just be the pullback after the first leg up, and we might go for a second leg up here. So I will sell either if there is a strong breakout below bar 30, or I will sell after a pullback after a second leg up. I'm not looking to sell below bar 18. There are more likely buyers below bar 18. Look what happened on bar 19. As soon as we went below bar 18, we did pull back. We went above the high of bar 18. If you see the high of this bar is 25,423. The high of this bar is 25,423.45. It went above the high of bar 18. And now we have a lower high double top. This bar is a possible second leg up after the wedge bottom. We went up, we did pull back. This tail up is a second leg up after this wedge bottom, a lower high double top with bar 16. And this is a reasonable sell for a swing for a possible break below this wedge bottom. Also, this is a trading range here. So if we do break below this trading range, it is possible we might get a measure move down based on the height of this entire trading range. Reasonable to sell below bar 19 for a swing. High probabilities to sell after a strong bear breakout, which we did get. Bar 20 is a bear breakout below this wedge bottom. Also, we did get a minimum follow through for the bears. That is an absence of a bull body. Whenever there is a breakout below a wedge bottom, the market usually falls for a second leg down. And looking at how tight this channel is, we might get at least two legs down here before the bulls attempt a reversal up, which we did. This is the first leg down. We did pull back, and now we have a second leg down here, bar 26. The market has been going down in a tight bear channel. But if you see, after every pullback, let me get rid of all these lines here. Bar 26 is right at the measure move target of this trading range. We did go below the measure move target of this spike, so let me get rid of this as well as this double top. We are right at the measure move target of this trading range. Also, if you see, after every prior low, we have been reversing up. The bears broke below this prior low, we reverse up. The bears broke below this prior low, we reverse up. Again, we broke below this prior low, we reverse up. Yes, we are getting body gaps and it's a small pullback bear trend. But why are we not getting gaps? Why are the bulls buying below every prior low and are able to make scalps? Every bulls buying here have been able to make money. Bulls buying here have been able to make money. When the bulls have been able to make money, the trend is not as strong as it looks. And when the trend is not as strong as it looks, you should look to sell pullbacks rather than sell at the low of the trend. So yes, bar 26 is another big bear bar closing on its low, but it is also a second leg down after the breakout below the wedge bottom. I'm expecting buys below the low of the bar, and I'm only looking to sell pullbacks here. I am looking to sell, but only on a pullback. Bar 26, bull bar closing on its high. Can you buy above? I would not. This is a tight bear channel. Every bull reversal up, no matter how strong it looks, has turned out to be a trap. This bull reversal up will also possibly turn out to be a trap. I will buy only if there's a some kind of a micro double bottom, because the probability of buying the first reversal up in a tight bear channel is low. Buy after there is some kind of a base or some kind of a micro double bottom. I'm more likely looking to sell here. Bar 30, you could say it's a double top with bar 28, but this is not enough of a pullback for me to sell. I will look to sell on a slightly more deeper pullback. Also, we are late into the trend. Whenever we are late into a trend, the trend usually weakens over time. And bears, the traders usually prefer to sell closer to the average price. The average price is still far above. So I'm not looking to sell below bar 30. I'm looking to sell after more of a pullback. Look at this bar. Big bear bar closing on its low. Also, you can say it's a wedge bottom here, wedge top here, wedge bear flag, and it is slightly closer to the EMA. Bears are looking to sell above bars, and they sold above bar 12 and bar 32. Sorry, they sold above bar 32 and 31 as well. And now we have a big bear bar closing on its low. Bulls will be looking to buy below prior lows, and bears are looking to sell prior above bars. Another bar closing on its low, you can sell here only for a possible small scalp here. Bar 34, another doji. Why are we not getting strong breakouts, strong follow-throughs? This is because there are bulls at every prior lows. Because we have been overlapping so much, the trend is not going to last all day long. We might soon convert into a trading range or might have a bull reversal today. This channel is unlikely to last all day long. Also, it is around 12 p.m. So it is around the time zone where we might find some base, we might form some base, and we might reverse up. Bar 34.5, bull reversal bar, but with a bear body. I would not buy above this. The channel is still tight, and I will buy only if there is a second entry, a micro level bottom, or if the market makes some kind of a base here. You can say bar 36 is that micro level bottom with bar 35. Also, if you see, we had a wedge bottom here. We broke below the wedge bottom, and now we have another wedge bottom here. Bar 36, exact midday, 12:10, consecutive wedge bottom, micro double bottom with bar 35, reasonable to buy above bar 36, at least for a scalp. It's a tight bear channel, so we are not going to have a sharp straight reversal up. You can buy for a scalp at least up till EMA. Good follow through for the bulls, good entry bar for the bulls, bar 37. Bears will be hoping for a 20 EMA sell setup somewhere near EMA, or maybe a double top with bar 33 or with bar 24. So bar 38. This is a surprise for the bears. The bears were not expecting this. They were expecting sellers somewhere around the 20 EMA, maybe a double top with bar 33, or maybe with bar 28. But this strong bull breakout above the EMA was a surprise. This makes me think that at least a second leg up is likely. Also, there is a consecutive wedge bottom, so two legs up are likely, which is what we got here. First leg pull back, and then there is a second leg. And now we have a bear bar closing on its low on bar 46. So the market after the wedge bottom has been up for about 10 bars. We have gotten two legs up. And because of this side bear channel, the reversal up was only minor. If the market, if the traders, if the buyers want to reverse the market into a bull trend, they will have to create some kind of a major trend reversal here. The market from this bear channel is first transitioning into a trading range. And in a trading range, you always have to expect two legs up and two legs down. We got two legs up, and now we have a sell signal here on bar 46. You have to expect two legs down here. So it is reasonable to exit your longs below bar 46 if you did buy somewhere around here. I would have scalped out part of my trade somewhere here and held the remaining part for a swing, and after seeing all this price action here, I would have exited the remaining half. Bar 46, lower high double top with bar 41. Reasonable to sell below the low of this bar, at least for a scalp, expecting trading range behavior and at least a scalp move down. We did fall for two legs down. In fact, we fell for about three legs here. If you see, now we have a wedge bottom here. We have a double bottom with this low as well. And this is sometime around towards the end of the day, 1:45 p.m. Bear trend, bull breakout above the bear trend line, pull back, a weak pullback with three pushes down, wedge bottom, double bottom as well. So this is a setup for a high low major trend reversal, or maybe a low low major trend reversal. This is almost an exact double bottom. So double bottom major trend reversal setup here. 60% chance we are going to remain in this trading range. 40% chance we are going to break out above this. So reasonable to buy above bar 55 for a swing. Expecting a bull breakout above the neckline of this double bottom and a rally all the way to this measurement target of 25,464. Disappointing follow through for the bulls here. Bar 56. The next bar as well. The bulls who bought above bar 55 are disappointed by the entry bar 56 and will also be disappointed with the pullback on bar 57. Yes, the bulls have been able to protect their stop loss here. And it is also a micro double bottom. But the bulls need good follow through if they want to break out above this and go for a measure move up. They have been able to protect their stop loss, but they need to start making good strong bull bars closing on the highs. The EMI is turning out to be flat, and the market is in a lot of trading range behavior, not just here, since a lot of days now. If the bulls want to change the character of the market, they need strong follow throughs here. They have gotten a good buy signal bar. They have a good major trend reversal buy setup here, but why are they not getting good follow throughs here? This is another micro double bottom buy setup for the bulls here. All that bulls need to do is start making good entry bars with good follow throughs. Okay, follow through for the bulls. A close barely above the midpoint, but not above the EMA here. Good follow through for the bulls. However, the problem with this bar is, yes, we did close above the midpoint here. If you see the size of this bar, we closed exactly somewhere around the midpoint. And we're right near this double top, double bottom neckline. Why did we not have a bar closing on its high? The bulls need to have good follow through after this bar. The next bar is important right now. They have a bull breakout bar here, a close barely above the midpoint here, but need to start having strong closes above this double bottom neckline if they want to rally all the way to the measurement target now, or maybe all the way to the channel high at minimum. Good bar for the bulls, but not strong enough yet. Not a buy the close bull trend yet. We are also right near. You can see there are three pushes up: bar 24, bar 41, and bar 59. 3 pushes up, 2 pushes down. That also makes a case of an expanding triangle. So if the bulls are not able to generate good follow throughs here, and if the bears are able to create some kind of a top here, that will make an expanding triangle top, and the market will fall for at least a scalp. We have two legs up, and with all this trading range price action being going on, it is possible that the bears will attempt a top here, and we might get second leg down. Bulls need good follow throughs. The bears, if they get a bad follow through for if the bulls are not able to get good follow throughs and if the bears get a reasonable sell signal above, we might fall for a scalp. They were here, but not strong enough to sell below. II pattern now, bar 61. Reasonable to buy above bar 61, expecting a breakout above the neckline of this double bottom, expecting a breakout above bar 59 high and a measure move up. Reasonable to buy above this. You are buying near the high of a trading range. So you can do so only if you are going to swing your trades. Buy above this with a stop below at minimum below bar 57. Expecting a bull breakout and a measure move up and a risk reward ratio of at least 1:2. You cannot buy above this for a scalp. The probability is not high enough. Another inside bar. So we have an I pattern now. But why are the bulls hesitating to buy here? Why the bulls are hesitating to buy above this breakout point? This is disappointing for the bulls. A few more bad follow throughs will make trading range more likely rather than a strong bull breakout and a bull reversal day. The bulls have a breakout above this I pattern, but they need more. This is not strong enough yet. There are still bars to the left, and we need to break out strongly above. Again, a bad follow through. All of this are signs of trading range behavior now. Doji here, bull breakout, bad follow through, bull breakout, bad follow through, doji here, II pattern. All of those are signs of trading range behavior. So this has just reduced the probability. All these bad follow throughs and dojis has reduced the probability that we might get a breakout above this double bottom neckline and a measure move up. This makes the case that we might fall for two legs down. We have been rallying for about two legs up in this trading range. We have been rallying for about 7 to 8 bars now. We might fall for a few bars now. Reasonable to sell below bar 65. Good sell signal bar. Micro double top with bar 63. Lower high double top with bar 59. Expanding triangle top and a good sell signal bar with the bar closing near its low. EMA is flat and there is a gap between the low of the bar as well as the EMA. I would take that. Reasonable to sell that for a scalp. You got a big bear bar closing on its low, another tail and another doji. And this is entering towards the end of the day now. Towards the end of the day, I either want to buy the close bull trend or I want to sell the close bear trend. If I did sell below bar 65, I would scalp out of my shorts somewhere around this zone. Because we are entering near the bottom of the trading range and this is the buy zone right now. And towards the end of the day, I only want the market to be in one direction. If I am going to take any trade, I cannot be holding my trades with all the reversals and pullbacks. But with this big tail and with this doji, I would exit my shorts and I will probably not be taking any more trades for the rest of the day unless we get a strong bear breakout along with good follow throughs and a sharp move in either direction. We did get a bear breakout here, but continue to have bad follow throughs and the trading range behavior continued. So the entire day almost has been in this trading range. We did get a bear spike here, and this did look like a bear trend until midday, but it was nothing but a bear leg in a trading range. And when you see at the end of the day, the market was just stuck in a about 90 points trading range here, except the bear spike on open. So quite a small day with a lot of limit order trades, very few stop order trades. If you were taking trades, if you're selling above bar, scaling in higher, you would have been able to make money. And you can do so only when you have a good capital. When you have a small capital and if you are a beginner, You should not do that. You should only focus on the stop order trades. Maybe if you take just two or three trades during the day, the trade here was good, but with bad follow-throughs, you had to exit. The second good trade of the day was above the high of bar 36. If you did sell on open after the 2 bar bear spike, you could have exited. You could have held your shots until bar 9. Buying above this was a good trade. Buying above bar 36 was a good trade. Selling below bar 46 was a good trade. Buying above bar 54 or above bar 57 was a good trade. Selling below bar 65 was also a good trade. And towards the end of the day, not much was left. So if you did make money today, that is great. The market was not as easy as it looks towards the end of the day. You had to be focused and you had to buy quickly, you had to sell quickly, you had to exit. Every bar was having reversals: bull breakout, bear bar, bull breakout, bear breakout, doji, reversals, disappointments. So you had to be clear in your mind, you had to be quick in your scalps, and you had to be focused. So the entire week we have remained in a trading range. We were in a trading range here. We broke out above, we reversed down. We broke out below, we reversed up. But that reversal up failed, and we have another trading range here. So what do I expect for tomorrow? This is the previous day high, and this is the previous day low. If you look at the daily chart now, like how I discussed in the beginning, I'm expecting this gap to close. The breakout above this, the gap to close. However, the problem is, if you look at all the bars in the past few days, we have been getting disappointing follow through after every big bear bar. Big bear bar, disappointing follow through. Big bear bar, reversal up. Big bear bar, reversal up. Big bear bar. What do you think is more likely tomorrow? Disappointment is likely. Also, this bar failed to close below this prior swing low. Yes, we might close this gap. Yes, we might at minimum test the daily EMA before reversing up. But I'm not expecting a big bear trend day tomorrow. Even if we do reverse down, we might find some buyers around the daily EMA or maybe around this breakout point after the close of the gap and maybe a reversal up. So tomorrow, if we do open flat or somewhere in the middle of the yesterday's range, I am looking to get short until we get somewhere around this breakout point or maybe around the daily EMA. The daily EMA is around 25,000 to 85. Okay. So this is the daily EMA and this is that breakout point which I'm talking about. This is the minimum that I'm expecting tomorrow or maybe in the days to come. So if we do break out below this, if we have strong bear bars, good follow throughs, I will be looking to sell. But I'm not expecting a big bear trend tomorrow. I will expect some pullbacks around the daily EMA or maybe a close of the gap on the daily chart 25,222 and maybe a reversal up. So if you do open flat, I'm expecting about 150 points, 150, 200 points down, and then maybe some reversal up sometime around midday or maybe around 10:30. Not expecting a big bear trend tomorrow. Maybe a bear trend by close of the gap and maybe a reversal up with a tail on the bottom of the bar and a close above daily EMA. What is the possibility of a big bull trend day? If I look on the hourly chart, we have been getting a lot of lower highs here. Lower high here, lower high here, lower high here, lower highs. So unless we get above any of these lower highs, I'm not expecting a big bull trend day. Even if we do reverse up, suppose we open flat, or suppose we open gap down, or maybe open flat, fall all the way to the gap, close this gap, and maybe reverse up. Still, I'm not expecting a strong bull reversal up, or maybe I'm not expecting, even if we do open gap up, I'm not expecting a strong bull trend day unless we break above all of these prior highs. So this is that previous major lower high. Unless we strongly break above this and start getting a lot of good follow throughs, I'm not expecting a big bull trend day. Any reversal up will only be a bull leg in a trading range. If I do buy, it will only be for a scalp and I will be looking for a reversal down. If we do break out above this with strong follow throughs, I will be expecting a strong bull trend day. If we do break out below this and have a strong follow through, I will be expecting buyers somewhere around this gap. So a trend day is unlikely tomorrow. More likely, more likely sell off in the first half of the day and maybe trading range for the rest of the day. Also, tomorrow is the last of the week, so weekly support and resistances will act as a magnet. We are right near the low of the last week, which is 25,461. So if I do mark that, we're right near that. This is the low of last week. Also, let me mark the open of the week. Okay. So I'm not expecting a lot of buyers somewhere around the low of the last week. I'm expecting buyers somewhere around here. But if you do reverse up, I'm not expecting a bull trend day. We might close somewhere around the open of the week and make a doji bar on the weekly chart here. So if we open flat, I'm looking to sell. If we open gap down and we close this gap, I will be looking to buy for a rally somewhere at maximum around the open of the week. That is what I'm going to do tomorrow. If there are any changes, if there is any change of market behavior tomorrow, if we do have a big trend day tomorrow, a bear trend day or a big bull trend day, we will discuss it in tomorrow's video and catch the move next week. Okay. Best of luck, everyone, for tomorrow. Thanks for watching.